Baby shark, baby shark, baby shark, baby shark, mommy shark.
And welcome back to the show this morning. It's 6:34. Michael Lebowitz, CFA, joining us this morning to talk a little bit about the markets, the economy, what's going on here. Interestingly enough, we're talking about debts and deficits in the last segment, and of course, we're already pushing a $3 trillion deficit this year. It will go to 4 to 5 next year. If we pass another $1 trillion, just tack that on to the debt, the deficit, because again, everything that we do now comes out of debt. It already takes more than 100 cents on every dollar just to pay for social welfare and interest on the debt now. Right. So in 2019, just to put this in context, we were spending about 97 cents of every dollar of tax revenue on Social Security, Medicare, prescription drug benefits, Affordable Care Act, and, of course, interest on the debt. Now, that's mandatory spending. We have to pay that regardless. Right. Everything else comes out of discretionary spending, so to speak. We could cut back on defense spending. We could cut back on education, those type of things. We don't, but we could. And that all comes out of debt. Today, because of the collapse in the economy, tax cuts, everything else we've done, we are now having to dip into the debt pool just to fund mandatory spending, which means we're now increasing our debts and deficits just to fund mandatory spending, not to include everything else that we've got to go into debt for. So now we're expanding the debt on a fairly rapid pace. We're going to be pushing 28, 29 trillion, 30 trillion over the next couple of years. We don't budget anymore, so we simply just keep passing continuing resolutions. So we got to pay for this at some point, right? I mean, everybody realizes, I think, that you ultimately wind up paying for debt one way or the other, right? So at some point, you're going to have to tax people. Well, so the Democrats right now running for office, Joe Biden, talking about, well, we're going to go tax the wealthy, right? We're going to go get those evil rich people, and we're going to tax them 2% of their wealth, whatever the proposal is. We're going to raise the tax rate on them, and we're going to tax them more. But the one thing that we keep avoiding, though, and this isn't surprising, and there's that old joke that says that congressmen should wear jackets with all their sponsors on them, because corporations are the ones that are generating. I mean, take a look at the stock market. We're right in the middle of earnings season here. These corporations are reporting billions of dollars in revenue, and yet their tax rate, their effective tax rate. Now, there's the statutory tax rate was 35. We lowered that down to 20, under the Trump administration. The effective tax rate's around 10%. But you have companies like Amazon that pay zero taxes on billions of dollars worth of revenue. And I'm not saying that we need to go crazy and go tax everybody, but my point is that ultimately we are going to have to increase taxes. Higher taxes are coming. There's no way around that with this type of debt and deficit that we're running. We just don't get out of it with higher taxes. That's coming. But who do we tax, and where do those tax revenues come from, and what does that impact look like? Mike, what are your thoughts here?
Look, ever since 2008, we've been kind of living in a debt fairy tale. Prior to 2008, you borrowed money, your debt went up, but as debt went up, that means the Treasury has to issue. As the deficits get worse, the Treasury has to issue more debt. The more debt there is, it's a typical supply-demand thing. Interest rates go up. Mm-hmm. The government has to pay a higher cost for that debt, and they have to borrow more. And it's to some degree self-regulating. You can't just play that game forever because it accumulates quickly and interest rates go up. It hurts the economy, and it becomes obvious to everyone. Mm-hmm. Well, the Fed pulled out the biggest magic trick of all. In 2008, right? They said, whoa, Treasury, you don't have to issue all that debt. Well, issue it, but we'll buy it. You don't have to sell it to anyone else that'll cause interest rates to go higher. We'll buy it. In fact, we'll push interest rates lower. So even though you're going to have 30 trillion of debt, don't worry, the money's for free, right? It's your interest rates are so low. Borrowed for 10 years at 0.5%. Doesn't matter, right? We'll just buy it all, right? This is a fairy tale, right? It sounds great. It sounds great. Rich Uncle Sam is just bailing us out. We keep spending as much money as we can, and then every Friday he drops by a big stack of $100 bills, and we can keep spending all week. And this goes on, and everyone thinks this is free. Again, it's not free. We're paying a dear cost for this now and in the future for what the Fed is doing. And everyone thinks the Fed is this great thing, right?
Mm.
Right? It's like Santa Claus. They're dropping bundles of money down the chimney all the time.
Right.
The cost is what we're seeing is a societal breakdown. It's the gap between the rich and the poor. It's everything. It's spending that is completely uncontrollable at this point. From both sides, right? Mm-hmm. It's hard to differentiate now between Democrats and Republicans. The spending is immense. They have no idea the amounts that they're spending, right? What are we going to have, a $4 trillion deficit this year, give or take a little?
Yeah.
That's more than twice what we saw in 2008.
Right. Well, and again,
right?
At some point, though, it seems inevitable that, they're going to have to raise taxes. And yes, we can go tax. Let's take all the billionaires in the country and let's just tax 100% of their wealth, right? And you just take it all away from them. Well, those are also the same guys like Jeff Bezos that have started companies that employ millions of people. So you can tax billionaires into oblivion. They're eventually just going to leave anyway, or you'll simply just destroy that part of the wealth. But even if you took all their wealth away, it barely puts a dent in the deficit. I mean, and that's for 1 year. Then what are you going to do next year? Right. So taxing individuals may sound like a great thing. Let's go get those evil rich people and tax all their money. But that doesn't really solve your problem. A, you don't raise nearly enough money from those taxes to solve your problem. And B, because of the tax loopholes and their army of lawyers, they wind up not paying it anyway. Or they leave the country and go to a better tax-friendly jurisdiction. The other thing is that we don't want, we're trying everything in the world not to tax corporations, but that's the most logical place to go, particularly in an environment where they've got an effective, 10% tax rate. IBM just reported, revenue and earnings, just had their earnings report, and they're running one of the lowest tax rates in like 20 years for the company. So, we give a lot more tax breaks and benefits to corporations, but that seems to be the most logical place to go for more taxes, is to reverse the recent corporate tax cuts, bring those rates back. They were still lower than any other country in the world because we don't have a VAT tax. But that's where billions of dollars of revenue is generated, and seems to be the most logical place to go without affecting, the consumption spending across the economy because of, not taking more income away from individuals by higher taxes on individuals.
Yeah, I agree. I mean, I think, look, they need to pay a lot more. They need to pay more in taxes, not a lot more, but that's also inefficient. The more they pay in taxes, the less money they have to pay their employees, because they got to pay the CEOs $50 million a year, right? Right. There's a whole corporate problem. Boondoggle. And they're not incented to grow. They're incented to produce profits this quarter, next quarter. They don't care about the next 5 or 10 years, and we've talked about this. Very few corporations are productive. Most of them are just playing financial games to get through the next quarter, right? We just saw with Tesla's earnings. They posted a profit last quarter. Well, it's because they sold a bunch of tax credits. That's not the, if you're buying Tesla at whatever it is, $1,500 a share, right, because you love the tax credit story, then more power to you. That may be the right play.
Yeah, out of their just to put that, just so people understand what you're talking about, they reported about $450 million worth of actual revenue. 428 million of that revenue was from tax credits. So in fact, they didn't make any money off selling cars. It was on tax credits. But that's part of this other problem, right? This is part of the other problem with government. Here's specifically another issue. We have all these stupid credits that individuals, taxpayers, are paying for because we're having to provide those credits to Tesla out of debt. So we're using government debt, to fund Tesla, and which is fine, right? But does Tesla really need a tax credit now that they are a up and viable and operating company? Now, maybe at the beginning, maybe they needed that to get started. We innovated a new technology. Some government help there, absolutely good. Time to remove that credit and put that money back to the taxpayers.
And then the other thing they do is they move, right? Where's Tesla moving to? And
Austin.
Who's paying for that? Who's paying for that? Not me. It's you.
It's
you
me.
and Brent.
Yeah, me and Brent.
Lance and Brent are paying for that, right? I mean, look, they're moving because of the regulations, but they're also moving, I'm sure, because taxes will be lower in Texas than they are in California.
Absolutely. We're much more tax friendly.
And it's not just because your taxes are lower, but I'm sure they're getting extra incentives on top of that.
Yeah, they're getting a big tax credit from Austin to move there.
Right. And we saw it here. Amazon is moving 50,000 people to Virginia. Same reason.
Right.
It's because they're getting incredible tax incentives.
Yeah, but you should get your delivery in like 20 minutes now.
And I don't live in Virginia. So
You just swing by the warehouse and pick it up. Don't have to worry about delivery anymore. So, but no, I'm not saying that we should all go out and go crazy. I don't want anybody to misunderstand. I'm not saying we should go out and tax everything like crazy. All I'm saying is that higher taxes are coming from somewhere. And, where you choose to tax is going to be important because A, you have to generate enough tax to actually make a difference, and B, you can't tax to the point that you create an inefficiency within the economy, which hurts other people, which hurts economic growth even more. So, how you do this is going to be very important. Anyway, come back. We'll wrap up the show. Michael Lebowitz, don't go away.
To the sound of the beat, yeah. Another one bites the dust. Another one bites the dust.
Follow us on Twitter @Real Investment Advice or go to realinvestmentadvice.com.